Thanks for tuning in to another video from NetPicks, and we're going to do something a little bit different, especially after this whirlwind of a week we had in the stock market, especially two stocks in particular, GameStop and AMC. There's a lot of videos out there. I'm sure you've seen some of them. Basically, what happened is you have people short in this market, usually the bigger players, right, holding this market down. Big group on Reddit decided to squeeze them, started to buy up. And that's pretty much what happened. And the plan was to get those that were short to start unloading their massive positions, driving the price up, and then people take their profit. With AMC, it was a little bit different. Going into Friday, it was trying to hold price above $9 for options expirations, and they managed to do that. So they're expecting some play on Monday of more of a move up. But what I want to talk about, when you go through Twitter, you see a lot of people that have never traded before wanting to know how to open up a trading account, wanting to jump into these trades without having any idea of what they're doing. Now, in the short term, when this kind of stuff is happening, when it's manipulated as much as it was, yeah, you're going to make some money. Okay, you can make some money. I'm not going to say you're going to make some money, but you could make some money. Okay, but the problem is it gives the illusion that trading is easy. And that's not what we want, right? If it was so easy, people would be doing this every single day. But we don't get moves like this every single day. And if you took this same approach into a normal everyday stock that's traded, you're going to get wiped out. Most traders went into this without one idea of risk. For example, for AMC, what was the keywords of the day was hold the line. So any trader that bought high and they were underwater in that trade, they were holding on. And those kind of losses, especially if you bought at the top, which traders did, that can lead to a whole lot of pain in the majority of your trading. So we want to take a look here. This is GameStop. This is the one that started it all. This is the daily chart. If you just look at those 3 daily candles, how would you trade that? Just looking at it. In hindsight, you say, yeah, I would have been in at the break there at the gap. I would have traded into the gap fill. Yeah, of course you would. No, you probably wouldn't have. Okay, this way this stuff was going on. If you look over at AMC, let's bring that up here. Same idea, right? It looks the same. You can see where all the actions start to happen. So what I want to talk about is what other people are not talking about. What could you do different? The problem is if you're using trading indicators for your trading, for example, someone said, hey, buy the moving average cross. The problem is with these kind of moves, when those averages cross, price is so far away, so far extended, right? You get into what we call exhaustion risk, and that's where the market's going to turn back around. For example, if you look over here, someone bought here, right? There was buyers up in here. And then what'd you get the next day? Price dropped all the way down to 652. But someone bought the high, right? Somebody sold down here at the low. You see the same thing with GME, same idea, right? Someone bought up here, and someone else sold up there. But a lot of that was just knee-jerk trading. It was looking at the big candles and making that your trading plan. And for most traders out there, it's not going to turn out well for you in the long run. Let's take a look at what could we have done different. Is there a way that you could have approached these markets with some semblance of a trading plan? Let's go to AMC since that was in play. Let's go down to a 60-minute chart here. This is just the Keltner channel. It shows you when markets are extended away from an average price. This is a 20-period moving average. And you can see the price is hugging it around there. Now, don't look at it as offering support and resistance. All it is just an average price. And when price starts to slow down, like you're seeing in here, the moving average will just catch up to the price, okay? And then from inside of that, you'll find different structures that you can trade against, such as support and resistance. But what could we have done different? Even on this hourly chart, it looks pretty messy. So one key that you can take away from it is traders will look at a chart, and a lot of times it's what happened in the past. What's it look like in the past? For example, if we took this high to this low, I want to show you something pretty interesting that you're going to see here. If I took this distance here to here, right, and I took that same distance to this high up here, I want you to see where it comes in at. It comes in right down to $6.76. Okay, almost this exact same move down. Okay, so that gives you an idea of, okay, well, this is where that market might bottom. This is where I might be able to find a trade entry to get into. Instead of just jumping in these different areas, you're finding a place that you can get into, right? You're just measuring the swings of the market. Another way we can look at things, we have a high here, we have a low here. If you're trying to get into this market, into this stock, well, you can see we're putting in lower highs, right? What's a trend? Higher highs, higher lows. When you get into that kind of, where you're putting in lower lows, the odds are you're going to get down into lower prices like you do see here. And as you go down in smaller time frames, look at a 15-minute chart, then you get some different things playing out as well. You got double tops up here, which is just structure. Okay, let's go back to the hourly. What else can we get here? What about, how do we find out if this market's going to go higher? Well, in order for this market to go higher, or this stock to go higher, we need it to start making higher highs. Now, if we took this measurement from here to here, so that swing up, we projected it from here, right? What this is basically saying is any price move up into here still runs a higher probability of turning around, right? Because it's the same move from here to here as it is to here to here. Once we start breaking above 1695, traders that understand this approach will start jumping back in the market. See, the problem is when you're using trading indicators and you're getting these kind of movements in the market, you can't really rely on what the indicator is telling you. Let's look at a 5-minute chart. There. See how sloppy it's looking, this market. Back and forth, back and forth. But again, this is just being manipulated. So as a trader who's just coming in here for the first time, you know, when you start seeing this running away, a lot of you were probably thinking, I got to get in this trade. I got to buy in here. So at $21.89, you bought this stock. It went up a few, turned around on obvious reversals, right? This is an obvious exhaustion up here. And then price broke down this downside here to 11 bucks. If you go through our channel here, you'll find different approaches that you can actually be using as we go through this pretty unprecedented time. Well, it's not really unprecedented. It's happened before. But not a bad way to start off 2021, that's for sure. You can also look at what we call pullbacks or flags, bear flags, bull flags. I don't get into the technical definition of them. All I'm looking at is a pause in the market. What does that mean? So you're going into next week, and this is not trading advice, all right? I prefer you not trade this. I prefer you to have a strategy. But look for the market to do this kind of action here, just pulling back a little bit, right? As it's making a high, it pulls back, and you get on breaks of these as your trigger to go long. So now at least you've got some plan of how you get into a trade. And what that'll do is when these markets are going up like this, you're not just piling in. You know, yeah, you might see this and think you're going to miss out, but then this happens. All right, so at least this will give you a plan. And if price does break up and then it breaks below here, you're out. Or this low here, you're out. And then save those bullets to buy again at a more opportune time. So sticking here with AMC on the 1 hourly chart, we can also look at it from this standpoint as well. Again, this is just a MACD. It's an indicator. And for this, it's not that bad because I'm using a fast setting. I'm using the settings of 3:10:16 and the simple formula of these. It's pretty much it can be used as a momentum indicator, the fast line. And what do we see here? Well, when you are in a market and you want to make money from you buying, what you need is the market to start making higher highs. But we need momentum to do that. So we see here the market made a high. So if you bought in here for some reason, and obviously someone did, right, or it wouldn't have got higher. But if you look down here, our momentum indicator is not going in this direction. Our momentum indicator is going down. And price followed suit, right? It's another approach you can take. If the price is going up, but a momentum indicator such as the MACD is heading downwards, you maybe want to be sitting on the sidelines until there's a better chance to get in the market. Heading back to GameStop, and this is obviously this has already happened. These candles here with these long shadows down, these are areas that you can also look at to get long once price breaks above the highs of these. It does here. You get up a little bit into here. So it actually went from $280 up into $409. Because what do you see when this happens? Right? You see the markets went down, market dropped down, and immediately bought back up in that 1 hour time frame. When that happens, you know there's buyers in play. Okay? So looking for a candlestick such as this to get into the market will actually also give you a plan going forward. Where you run into some problems often is when you get these candles here trading inside ranges of other candles. So if you see this here, this here. Now here's the thing, when you're looking at charts, you know, we make up time frames of 1 hour, 30 minutes, 4 hours. We make up those times. But there's 2 hour charts, there's 3 hour charts. Okay, there's 15-minute charts, 20 minutes charts. So as you get better at trading, you start to see candles joining together. For example, this to this, all these candlesticks are trading inside of a candlestick, right? These are called inside bars, and there's a multiple of them inside of these. Now this is a huge range right here. So you can make money, but you see that we're trading right inside the middle of the range, and you see that it's chopping around. And if you look at the 20 period moving average in the Keltner channel, you can see price whipping around there as well. So going forward, how would you get into this? Well, let's take a look at this. We know from here, this is a high, this is a low to high from here. You see the price is stalled. Okay, so price is stalled at this exact same move up. Unless we start breaking above 386.73, this GameStop play is pretty much dead, right? Because if not, we start going down, right? We could chop inside of this, but that's not a whole lot of fun to be sitting through. But what this does do, if you would have bought in on this candlestick here, and you know that this up move failed to the downside, and then you've measured that move to here, if you bought in here and you're stalling in through here, then as a trader, okay, not a gambler, but as a trader, you've made some money. You bought it at 277. It's stalling up at 386. You made some money. It may be time to be thinking of getting out of that. And is there a way to get out? Sure there is. See this big candlestick here? It's what we call an outside candle right here, where you took out the highs and took out the lows, right? If it starts breaking down below this, get out, right? That's your exit. So you have to have your own idea of when to get out of the market. We had a push up here. We had an inside bar here, inside candlestick. Your exit could be just below that. If it's not going to break lower from there, you get out. Do you miss this little push up? Sure you do. Okay. But that's the difference between having a plan and not having a plan. Go back to AMC. Just go down to a 3-minute chart. Maybe someone wants to trade 3-minute charts. Same thing, right? It doesn't matter what time frame. We just don't want to be popping in and out of the market just because the market's going up. And if you trade this 3-minute chart, for example, all the way up, you're seeing what we talked about earlier. Market moves up, give a pullback, right? A break above that, you get in. That's an approach that you can have. Put your wrist down here if you're not going to, quote, hold the line. But then you have a plan. All right. So that's the whole point of this whole video, was just when I saw on Twitter people just throwing money into this and not having an idea of where to get in. People asking, well, when should I get out? Where should I buy? You know, this is bad. This is bad. because you just know that some of these people were using this as a way to, quote, get rich. And who knows where this money came from that they're using? Was it rent money? Was it food money? Who knows what it was? But if you don't trade with a plan going forward from here, and you walk away thinking trading is easy because you managed to pocket a lot, it's the wrong road. And even though this whole plan was to really go after the big money, well, they're paying out too. Silver Lake cashes out on AMC for $713 million. So if going after the big money people, it was the plan, well, it didn't work, right? You still get the big money, making big money. All right. Any questions or comments? Pop them below. If you're going back into this market next week, have an idea of what you're doing. All right. Don't just jump in because the market's flying high. Talk to you soon.